Yeah, so what's up, guys? I hope you are doing fine. So today, I'm just going to be doing weekly review, and then I will do some weekly outlook with it, what we should be expecting for the week and all of that, right? So this is GBP JPY, right? So, and this is monthly time frame. And as we can see, what we have here, the price action is quite kind of clean, right? So without wasting our time, I'd like to take us to 12-month time frame. I want us to see something very important there. So as you can see on this time frame, right, we have this large imbalance, all right, this large sell side imbalance, buy side inefficiency, right? So at first, price traded into it, right? I think it's hit the 50% and then sold off. You can see that. So, and again, price traded lower to this down close candle as what? As bullish order block, and then price skyrocketed to the upside. So we took out this high. Actually, this is a failure swing, which can still be used as what? As as a means of market structure shifts or sentiment shifts. For the fact that we cannot see some sort of sentiment shift, right? That's where market structure shift comes in. But structures are very, very subjective, especially lower time frame structures. Do you get? But when it comes to real subjectivity, right? All structures are actually subjective. Liquidity, when you understand how liquidity generates itself around in the marketplace, I think that's the real deal. Do you get? But seeing this on a higher time frame increased its validity. Do you get? That's my point, basically. So as you can see right here, we broke the high of this failure swing to the low, right? So which is looking like a market structure shift. But on a higher time frame, I'm going to give us a an eagle high view for GBP JPY. I'm going to use another server, which is ICE. ICE, you can see ICE price action was all bearish, right? It's all just bearish, all long. Do you get? So long term, this guy is bearish. This guy is actually bearish long term. So you cannot really, in a sense, use this microstructure to determine what's going to actually happen based off all these highs here. Do you get? This is the major structure here. This one right here before price. You can see we took our liquidity after we dropped, right? So this looks like the major structure to me. Do you get? So, and you can see the gap that we have after we broke this high. So the main reason for coming to this time frame basically is to show us that all time we are actually bearish on this guy since I think 1975, something like that. So it has been bearish just like that. The structure is overall bearish. Do you get? So, and the reason why I came to this time frame is just that, I was looking at higher time frame, which is 12 months, right? And I have a reason for bringing us come to this, for bringing us here, right? So the main purpose I brought us to this time frame is that you can see after we broke this high, what do we left behind? We have a fair value gap. Do you get? So even if you are not, in a sense, interested in buying this, you are not, seeing this as a very long-term buys. Do you get? We've taken sales buy side liquidity, right? So we can, in a sense, be balanced, right? Or if we are actually bearish, because this looks like an up close candle to drop price lower to this sell side or this sell side liquidity. Do you get? So this is like a very low objective target for price. We've taken sell side buy side liquidity, so we can target this gap for targets, right? And what actually gives me the initiative of focusing on this gap has drawn liquidity was that there was a very nice willingness to do that on a monthly time frame, right? So this is the high of the fair value gap, right? And this is the low of that fair value gap. And if you are looking at that, immediately we hit that yearly up close candle. See what we had? We had a very nice displacement against, let's just say, this up close. Majorly, right? It is against 1, 2, 3, 4, 5. It doesn't have to close below. Do you get? We have a massive displacement below, but we did not what break structure. This is like the last low that made this high. We didn't broke this structure, right? So we just stayed above. Do you get? So after that, we rebalance the gap right here. This looks like an up close candle, right? We rebalance this gap, this fair value gap, and you can see the buy side that we took out here. You can see our price is actually aligning with that level. And again, all of this happened on a yearly order block, right? So, and this displacement actually come true as well as a result of hitting that yearly order block as well. So I'm really, really interested in it. So I'm going to take us to weekly, right? Because I've been watching this guy since last year actually. So as we can see right here, we have two imbalance, right? We have the first one and the second one based off weekly time frame. So basically, when you have conditions like this and you don't know which one to choose, it is always better and advisable to go to a much more higher time frame like monthly, so that the fair value gap can be compressed together. So as you can see now, we have just one fair value gap, right? And then price is reacting to that currently. And this is an up close candle for price to drop lower, right? So, and looking at price, some of us already have a knowledge or an intuitive knowledge of what liquidity look like. Your highs might be already gravitating towards all these low as well as sell-side liquidity, right? Which is actually, in some instance or to some degree, actually valid, because you can see that it is still within the range of that fair value gap on the yearly perspective for contest, right? So as you can see, this is the fair value gap. Price is still holding inside that gap, right? So I want to show something quickly on weekly because I've actually been following up for a very long time now. So yeah. So price traded to the initial fair value gap, which is the second one. This is the second fair value gap. Why? Because when price was dropping, this was the first one that was created. This was the second one. So when you are going up, you have to respect the hierarchy of how the fair value gap was formed. Do you get? So now, this is the second fair value gap. So price traded to that second fair value gap and was unable to actually run sell side, right? Because to some extent, on this time frame, for context sake, this low right here is acting as what? As a strong low. So that was why price was unable to actually, in a sense, take that low out. So we have a failure swing, and then price, break this high. We broke this high. We traded into this fair value gap, and then we ran higher into the second fair value gap. Now, that's that. You can see the accuracy of that. So we immediately dropped into the second fair value gap, right? We have a nice displacement low and not that very strong, not that very strong. And then we traded back to this gap. When it was going up, for the sake of quick delivery, that was why price just used like small portion of that fair value gap to run higher to this fair value gap, because it wants to quickly run to that area of liquidity. Do you get? So that was why it was going that fast. That was why it was unable to even do any, serious rebalance on this gap. Do you get? So the second time price returned back to that gap, what do we have? You can see we rebalanced very nice, right? We rebalanced very nice, and then we return back up. Now, I want to give us a very, very important aspect here. Price traded into a gap, which is the real gap here, right? Because this is the first gap, right? And usually the first gap is usually very important, basically, right? But if price is actually very heavy, very, very, very heavy to fall, it will not even trade to the second one. It will just use this to this first one rather. It will just use the second one and then continue selling massively. But because we have a very massive candles here, right? So price has to do some sort of short coverings, right? Short covering is when price actually dropped heavily, right? And it wants to cover that short a little bit, to just, cover some sort of inefficiency in price. That was why we see all of these, failure swing and price wanting to draw to this level and then, you know, partial close of this gap, and then it's not even partial, it's just like probably a quarter of the gap, of the whole gap range. So price went higher and then dropped to this as well. So when we see this happen, right now, our higher time frame contest is telling us to be bearish. Do you get what I'm saying? But weekly is telling us a different something. Do you get? When price was here, right? Let me go back to monthly. Now, this is the high of the fair value gap on a monthly time frame. Let's go to weekly. You can see the high of the fair value gap on monthly, right? So it is already telling us that we've traded into what? Into the monthly fair value gap, right? So to some extent, you might not be actually, in a sense, expecting all these longs that happened. Do you get? But if you understand the fact that price has dropped heavily, you can see those long candles, right? So price would want to do some sort of short coverings. So it makes sense then to see some longs in price, but you might not actually even think about that at all. Let's say you missed all these moves, right? And then you are waiting patiently for price to just show you the willingness to draw price lower. Do you get? So now, let's say you are focusing on this second gap to show you that, okay, we want to really sell, right? So on touching that gap, we rejected, price returned back to the high of the third candle, right? And then dropped again. It didn't really show any definitive willingness to show bearishness on this weekly, right? But the third candle that starts that sell took out this low and this low, right? Which looks like, to me, change in the state of delivery, right? So we took out the low of two candles, and after that weekly closed, on that weekly open, what happened? Price expanded higher at first. It expanded higher at first to do what? To raid out buy side liquidity so that I can distribute price lower. Do you get what I'm saying? So let's say you miss all of this, you shouldn't actually miss this one. So I'm going to take us lower time frame. I don't want us to see this jam-packed that much. I just want you to understand the dynamics of higher time frame. Now, the main purpose why I'm delineating this high and why you should actually trust this high so much is because on a monthly time frame, price has already rebalanced on a higher time frame, but there's no willingness to drop yet. This was the first high. This was the first candle that traded against that high. But this rejection alone does not call for any shorts on this time frame. You can see after the close of this candle, we have a gap, which means this gap can be a barometer for long and for shorts. Now, it was used for a long. You can see that price just traded into this low and then buy. If you want to sell, you would have actually want to see a close below this gap. Then and only then you can be contemplating to sell. Do you get what I'm saying? Because there's a relative low. You can see the low of this candle and the low of this candle, they are quite relative. So that looks like a sell side liquidity. Now, that's that possibility, but it didn't happen. This is the possibility that actually came through. And you can see the realization or materialization in price. So whenever you see a low or a high that rebalance the gap like this, for that moment, that high is very strong or that low is very strong. Now, for the fact that we are looking at a monthly gap And we've seen that traded into here at first, right? But we didn't really see any willingness to draw lower, right? And then at the second gap, this was the first gap on weekly. This was the second gap on weekly, and this was the first gap on weekly, right? So we draw to that. You can see how we had change in the state of delivery. We didn't see something like that here. Do you get? So this is showing some sort of willingness for us to draw, right? So immediately you see something like this on this weekly close, you can go to like H4. Now, if you go to H4, we are going to see a very much more streamlined price action to work with in that range. So now, as you can see here, that was the low. Okay, that was the low on that weekly, right? But if you come to H4, price is giving us more information to even work with. This is a low, this is a high rather. Created a low, a failure swing to create a new high, and then broke this low massively. When price broke this low massively, what happened? Price left two fair value gap behind, this first one and this second one. Basically, if you go to daily, because I believe there's a very strong relationship between weekly, daily, H4, 1 hour, and 15 minutes and 5 minutes. They have a very, very strong relationship with them based on how I've studied and all of that. Do you get? Which is why everything I do revolves around them. Do you get now? So when price actually broke this low, right? You can see we broke it max with lethargic move against this low. So price would want to actually, in a sense, return to these levels, right? You can see the first return to this level, we sold off at the open of the week, right? We sold off, and then price rallied again to the high of this week, of this candle. Now, this is a very nice level to sell from. I participated in this sell, actually, in these major sales. If you are following my work, I think you guys should remember the day I caught this sell, because I even called it for you guys, right? So we were able to cut that sell that day for this move, for this very, very move. Now, you might not be targeting this gap, but you can see how rough this price action is. It's very, very rough, right? So you might not be targeting this gap. I might just be looking at this low as what? As sell-side liquidity, and then that will be done for that. But you don't have to wait for price to get to this point before you get profitable. I think I took my partials when price actually took this major low, right? This very low here. And then we have another new structure to work with, which is, when you see that displacement that happens, price still left a gap behind. You can see we have that fair value gap there, and then price did what? Displaced lower, and then left another gap behind, and then displaced again to attack the sell side, and then finally trade to this weekly high of the fair value gap. Do you get? So now we can go back to weekly time frame. So now coming back to weekly time frame, from that very gap, what happened? Price expand again. Now I told us that this very high is a very strong high, right? Because this is the first gap, and price has rebalanced it, and price has fully rebalanced the monthly gap as well. And we have a reaction, which is a nice displacement. The first time price traded into monthly time frame or monthly POI, which is a fair value gap, we didn't really get this kind of reaction. You can see this reaction compared to this. So this is much more pronounced compared to this. Now we have something to work with. So somewhat, I can be looking at this high as what? As a strong high. I don't want to see this high taken out. To some degree, this high is strong, right? Adding been, it is efficiently closed, I will have 100% confidence in it that, okay, I don't want to even see anything happen to that high. But based off the fact that we did not really close this gap efficiently, do you get? I really don't have a very strong confidence to sell from this. But something really, really interesting happened on the daily time frame. I'll show us later. So we dropped, right? Which is a very nice reaction from this gap, right? And then what happened? And then what happened? Price stored here, was unable to take out this high, right? Let me show something. I told you there's a relationship between weekly, daily, each for 1 hour, 15 minutes, and 5 minutes, right? You can backtest them if you want. So this was when um this was when price failed to take that high out. But there's something very, very on the lower time frame, price took out this high, basically. Now, this is a very, very important thing to look out for here. When price took out that high, right? Price dropped. We have a very nice displacement in responsiveness not to take this high out as a strong high. Do you get? Why? Because it rebalanced a weekly gap. So I want to see it hold. I don't want to see anything that will happen to that high. If anything happens to that high, it means that my logic is flawed. Do you get? Now, look at this level that we sold from that level. You can see how nice that actually makes sense, right? It makes a lot of sense, right? Yeah. So look at this as well. Price displaced against these candles. Now, 1, 2, those are the last up close candle before price displaced. All right, so those are the real order blocks there. So price retrace back up to sell from there. I'm very honest with you, I was not in this move. I was not in this move. So not until this one very year, because it was very clean on weekly. And I was not even very active like that on it. I was just very focused on I was focused on my NASDAQ. I was trading NASDAQ. So basically, I just want to show us review for this guy, basically, just review. So now, let's say we were not able to participate in all of this, right? There's something very interesting that happened that that can give you perspective on daily time frame, right? You can see when price draw lower like this to this low, what's price really reacting to? Nothing really. When price was going up, what's price reacting to? Nothing really. It was just this sell side taking. There's no PDRA or strong support here. There's no strong support at all. So this was just what? Engineer sell side liquidity with this low. Now, this I, what is it going to do? What is it exactly doing? What's the purpose of this price going up? If you go to weekly, you can see that it's going inside this gap, right? So we traded into that gap. We traded into that gap, right? And then we displaced. You might not be able to participate in this this first candle, right? On that displacement. But in this kind of situation, I'll be interested in selling this thing, right? So let's go to H4 or H. You can go to daily as well. Now, you can see on a weekly open, because this is a new candle, you can see this eye. The reason why I draw this eye out, because I want it to show me where to see a new weekly candle. Now, look at this high. You can see that price traded above this horizontal line. Now, if you go to H4, we have to see something like that as well, just to identify that level. There's nothing serious about it. Now, this is the level. So on a weekly candle, on a new weekly candle, what happened? Price opened and then take out buy side liquidity. On a new weekly candle, we have nice displacement, failure swing to that high, right? So you can sell this gap in intention to do what? To take out this, we had fake lows, right? This was the low with this low, right? We called it engineer sell side liquidity. So if you are selling, this is your target, right? So you can take partials of this low, and finally of this. You can see they look kind of slant. First partial, second partial, third partials. That could be like your exit for price. Now, let's take off all these lipsticks. So let's go back to weekly. Going back to weekly, what can we see? You can see that now we've returned back to this low of this. We've traded lower, this was the first time price traded into this gap. What do we have? We have weakness, right? And then we have this run. Ever since then, we run higher a bit, come back, run higher a bit, come back again. Do you get? So this was the second time we are having a close below that gap. So that's very significant actually. So another thing is I've seen this candle close this high. Do you get? Close this gap basically. So I don't want to see price taking out this high. I'm not saying it cannot happen, right? It can actually happen. We can take out this high. We can take out this high, turn it to breaker because that was the last up close candle before price took out this low and this low. And we are going to use this high as what? Buy side liquidity to rate them. It can happen. There's possibility for that. I'm not shutting out that possibility. Do you get? But based on what I'm focusing on or what I'm anticipating currently, that will really, really make a lot of sense to me, right? I want to see this high hold as a strong high. Do you get? And then I'll be looking at this low, this very low. There's a relative sell-side liquidity here. So I want to sell this candle. I want to sell on this candle, right? You can see this is a bullish order block, bearish order block rather. And this looks like a very strong high to me. It's not as if I'm going to enter aggressively just like that. No, that's not happening. Do you get? And again, when price was going up, we closed above this gap and then again we traded lower, right? So initially this was like a support for price to buy, right? And then we rated it lower again. So support has turned to what now? Resistance, right? You can see that was the high of the gap. This is the low of the gap. And you can see that PS. You can see that position. You can see that PS right there. So from support, initially it was a resistance, right? It was a resistance. So in this case now, we can say this is a reclaimed fair value gap. Do you get? This is a reclaimed fair value gap. It was a reclaimed bearish fair value gap. Do you get now? So initially, it was meant to sell price, but we closed above. And then again, we violated it. We closed below. Price returned back to it, right? And then readed this low. Reading this low is very significant. When price was here, it can still buy because why? This is a down close candle. Do you get? But reading this low is a whole lot of structure shifts entirely, right? And price returning to this gap originally when it took out this low, it's like a real support turned to resistance or a reclaimed fair value gap in that sense. If you are looking at it in the context of when price closed above this gap, it is support turned to resistance. But if you are looking at it when price was trading from this high to this low, right? It's a reclaimed fair value gap. Do you get what I'm saying now? So that's the whole idea. So basically this week, I'm expecting shorts for next week rather. I'm expecting short for GBP, JPY. Do you get? So I want to show something quickly on its because there's usually something like called SMT, right? Like one showing you weakness, one showing you more strength. So you want to sell the one that is weak. You don't want to be really participating in the one that is showing some kind of strength, just like that. Did you get what I'm saying? So on a normal day, I would like to see something like this on weekly open. Do you get? Now, look at this low now. Look at the low of this candle to the low of this candle, right? So when price was buying, you can see this one formed a higher low. This low is higher than this previous low. And this low is what? Is lower than this previous low. Now, for price to trade lower like this, it means this one is still very, very weak. This one is very, very, very weak. And at the very end of the week, right, it's showing strength by taking out this high. And by the end of the week of this one as well, this one is showing weakness. So there's high probability that this guy is going to open weaker. It's going to open very, very weak for next week. Do you get what I'm saying now? Because it closed weak. Do you get what I'm saying now? So there's high probability that this one is going to open very strong as well. But I'm not really saying that's what's going to happen. I'm just telling you based off what couple of edges that I've studied and all of that. Do you get? So um you can see that distortion right there, right? This one was showing strength when the weekly open happens, right? And this was showing, no, sorry, this one was showing weakness, and this one was showing strength. Do you get? So when you see something like this, you can actually be buying this one to just short term. You could buy it to this other block. If I'm buying this guy from this low, I'll not actually buy it more than this place. I'll just TP and wait for reaction for shorts. Do you get? So I think that's that. And as you can see right here, this one is showing weakness already. This one is still showing strength. Do you get? But basically you can see they are all JPYPS, an up close candle, right? This is an up close candle, and this is another up close candle that price displaced against. So what formation is this? Price is showing formation of a proportion block, right? This up close and this up close. Do you get? So stuff like that. So we have sell side liquidity. You can see this one is even very much more like when this opened, it's showing more weakness basically. This sell side is very obvious here. It's very it's easy for price to drop lower, right? And the same thing to AUD/JPY as well. For AUD/JPY rather. So so for AUD/JPY, you can see right here, we have a nice gap here, and you can see that monthly gap as well. They have the same level of fair value gap on that monthly time frame. You can see. Do you see that? So last up close candle, right? So price touched that, and then we are currently selling. So based off weekly time frame, we have this last this last fair value gap after price actually traded into this first. Now, in this proportion, this is the second one, right? Because we have how many fair value gap? We have 3. Do you get? We have 3, but originally, when we went to monthly time frame, price has already traded into it, and we've seen significant displacement. Do you get? So this is the second one. So it's looking like the threshold of the whole gap. Do you get? So something like that. So price has traded to this gap right now. This was the first time. This is very significant, when price traded into the gap, because it shows weakness, right? The first one, second one, third one, it's not really showing any form of weakness like that. And then we have this one, which is very much significant. And then price returned back up. It was unable to take that high. Why? Because that high is a strong high. When you see a high or a low that rebalance the gap just like that, right? It's very strong in some instance. And if it's broken, just know that that price is weak. Do you get? Or you are wrong in context. You have to always wait and then reassess higher time frame, work again. So look at this gap right here, this low rebalanced, right? Because we are weak in price traded lower and break this low. So this is already showing us that we really want to what? Sell. Do you get? Now, another thing, you can see that in this whole range, we have 1, 2, 3 up close candle, but they are different in terms of where they are positioned. But when you look at it all, this is the real order block because it is very much more closed higher. It opens right here, it's closed here, right? So that's a real order block right there. So you can see the open of that candle, right? That is what price actually went for there. And price is using this as what? This previous weekly high as what? As probably, price is inducing the high, you can see, to sell. Do you get what I'm saying? So sell side liquidity, or the 50% of this week, right? So this is what I'm looking out for JPYPS, right? We might actually change the whole direction. we might change the whole direction. And based off the reality of the reality of trading that me I hold, I expect anything. I want price to express itself fully. I don't want to hold, I don't want to, you know, hold price within my own range of how it's supposed to express itself. Do you get? Because by the time you are doing that, you are just creating, you want to suffer yourself. You want to really suffer yourself. Do you get? So always allow price to express itself fully, like absolutely. And then from there, your hedge has to speak for itself. Do you get? And your system has to speak for itself as well. So that's just the point. So this is what I have for us this week. I've explained how we, JPY, GBP, JPY, how the price action actually happened. And I think from what I've explained so far, you've gained one or two things from that as well. So I think this is just all I have for us. And let's say probably during the week, I might actually drop another one. Probably it might be Monday or Tuesday or something. I might drop something about NASDAQ, US 30 and all of that. Do you get? Or GBP, JPY, GBP USD and Euro USD as well. I have a very nice teachings to show us there as well. So I will see you guys next week by the special grace of God. Yeah. Cheers, guys.